Hi everyone, welcome back to the market story. On the 3rd of August 2026, SEBI has changed something that affects every single trading day and how the official closing price of a stock is decided. It sounds technical, but it changes the last 15 minutes of the market and it even cancels your stop loss. In this video, I will explain the new closing auction session, which is CAS, in plain language, what it is, and how it works with a simple number example and exactly what you need to do differently. Okay? Here is why this matters even if you are not a full-time trader. For years, the closing price was simply the volume weighted average of the last 30 minutes. From August 2026, that's replaced by a single auction, one pool, one price, one moment, and critically from 3:15 p.m. your stop loss orders gets cancelled. So here is the plan: what CAA sees and what stock it touches, and the old method versus the new auction, the new timings and your square offs, the maths with an example, how it fights manipulation, who it affects, and what it means for options. Stick around for the checklist. So, what actually is it? So CAS is the call auction. At the end of the day, instead of averaging trades, the exchange collects every buy and sell order into a common pool and finds the single price at which the most shares can trade. That price becomes the official closing price. The mental picture I want to you keep is one pool, one price, one moment, rather than running average that can drift. It's one clean auction that everyone joins at the same time. Now, this doesn't apply to every stock. It applies to F&O stocks, the roughly 180 plus derivatives eligible names, which includes the Nifty 50 and Bank Nifty constituents and the large liquid stocks on the both NSE and BSE. Every other non-F&O stock keeps the old VWAP method. Nothing changes there. F&O contracts themselves trade a little longer, to about 340, and now settle off this new auction price. It went live on 3rd of August 2026. And remember, until 3:15 p.m. each day, trading is completely normal. CAS only changes the tail end. So to appreciate the change, you need the old method. The closing price used to be VWAP, the volume weighted average price of every trade in the last 30 minutes from 3 to 3:30. Weighted means larger trades pull the average more. And here is the mini example. 3 trades, 1,000 shares at 100, 3,000 at 101, 1,000 at 102. Multiple price by shares. When we add up them, divide by the total shares, you get the VWAP of 101. It's a simple calculation, right? But notice the catch. The closing is an average, a number nobody could actually transact at. That's the seed of the problem. So why change it? There are three reasons. 1. An average is easy to nudge. In quiet last minute, a few well-timed trades could drag the VWAP. Traders call these as the marking the close. 2. Because people rush to catch or push the close, final minutes become jumpy and unpredictable. And 3. The big institutional one. Index funds and ETFs must trade at the closing price to track the index, but you cannot place an order at an average number. So they ended up with a tracking error. So here is the new method. The exchange looks across every possible price and asks one simple question. At which price can the most shares actually trade? That price is the equilibrium price and it becomes the closing price. So there are four steps. Collect. All orders go into one pool. Second is the match. At each price, the number that can trade is the smaller of the total buyers and total sellers because a trade needs both sides, right? Pick the price. Whichever price lets the most shares trade wins. If two ties, the one with the smallest imbalance wins. And finally, everyone who matches trades at the one single price, even if you are willing to pay more. Let's make it concrete. Read the table. The first column is price. The next two are how many shares want to buy and sell at that price. Then the key columns. Total buyers willing to pay a price or more, accumulating from top to down, and total shares willing to accept that price or less from bottom up. The last column is how many can actually trade, the smaller one of two. Okay? So look down at the last column. 100, 300, then 600 at 101, then 300, then 100. 600 at 101 is the maximum. So 101 becomes the closing price, and everyone who qualifies trades at 101, one fair, transparent price the market genuinely cleared at. Okay. Now a common question. What happens to my order types in the auction? If you have a limit orders, any open limit order that you had before 315 is carried in automatically. You have set a price, so you only trade if the equilibrium is favorable, and if it matches, you get that single equilibrium price, often better than your limit price. If you have the market orders, these match first ahead of the limit. But brokers protect you by capping up at about plus or minus 3% of the reference price. So you have never filled at a crazy level. Okay? So there are three bits of important fine print. So first, what happens to your leftover orders? If a part of your order can find a counterparty at the equilibrium price, that unmatched piece is cancelled at the end of the auction. It does not roll over to tomorrow. Second, the close is randomized. The window shuts at a random second near the end, which stops everyone timing the last instant. So you don't know at what exact second the auction is closed. It's random. And third, and write this down, stop loss, iceberg, IOC, and GTT orders on FNO stocks are cancelled or blocked the moment CAS begins at 3:15. Here is the new clock. From 9:15 to 3:15, trading is completely normal. At 3:15, the closing auction begins. The reference price is set and the stop loss and the special orders are cancelled. From 3:15 to about 3:30 is the auction window where you place and modify orders. First market and then limit. Then limit only with a random close. And about 3:30, the exchange matches everything and finds the equilibrium price, the close. And by the 3:40, the closing price is published, with FNO contracts trading until then. And the one honest caveat, the exact minutes can vary a little by exchange and broker. So always confirm the precise cutoffs with your own broker. This is the single most important slide for the active traders. First, your intraday auto square off now happens earlier. Equity MIS position squared off around 305 to 310. Earlier it used to happen between 315 to 330. Bracket orders even earlier, and FNO MIS around 320 to 326. And second, please remember this, your stop loss is cancelled at 315. It will not protect you into the close. So the rule is simple. Close or hedge your intraday positions before about 310 and never assume a stop loss will save you in the auction. Let's put them side by side. The old VWAP way, an average of the last 30 minutes, a few trades in a thin volume could nudge it. Jumpy last minutes. Funds couldn't trade at an average and at a price nobody could actually transact at. And the new auction, one fair clearing price. To move it, you would have to outweigh the entire other side, an orderly single moment close. Funds trade exactly at the close, and a real price that markedly genuinely clears at. Now, why they have done it, right? Is for the manipulation. Under the old system, in a quiet light last minute, a relatively small trade could drag the average just enough to help a position, push an option strike, or flatter a valuation. That's marking the close. And now under the auction, to move the equilibrium price, you must outweigh the entire opposite side at that price, at real volume in the common pool, visible to everyone. And with the random close, you can't snipe the last instant either. Let's make the manipulation concrete. This is the satisfying part. Under the old system, picture a trader who is short a stock or holding puts and wants a lower close. In the final thin minute, when hardly anyone is trading, they fire off a few aggressive sells. Those late prints drag the 30-minute average down, and because late trades, the thin volume can carry weight, a spend of just few lakhs could tilt the official close. They might not even keep the position. Now, why does that die? To set the close at that price, they would have to pile enough volume there to make it the maximum tradable level, out of trading the entire other side. And they get filled on all of it. They must actually buy or sell at that whole size and at that price and carry it. So one sealed pool, one price, nothing to cherry pick, and the random close means they can't time the last second. So the close goes from a cheap late nudge to something you can only move by trading real, filled size, in full public view. That's why the trick dies. And here is some reassurance. This isn't an experiment by SEBI. Closing auctions are the global standard. India is simply catching up. It's currently active in USA, NYSE and Nasdaq, London Stock Exchange, Europe, Paris and Amsterdam, Germany, Japan, Hong Kong, Australia, and Singapore. All over the world it happens. India is very late into it actually. And in fact, India already uses a call auction for the pre open session every morning since 2010. So the mechanism is familiar and the trusted here. CAS just extend it to the close. Okay? So who is actually affected and how? There are three groups. For retail traders, it's mostly indirect. You don't run the auction. The close is set for you. Your real change is behavioral, intraday timings and stop loss point. You do get a fairer close. Mutual funds and ETFs are the big winners. They can finally trade at the official close, which means lower tracking error and more accurate NAVs. This was practically designed for them. And large institutions get a deep single pool to big size at the one price with less market impact. Block buyers meet block sellers at the same price. Alright, the practical checklist, and take a screenshot of this. 1. Exit or adjust your intraday positions by around 310. Don't wait for 315. 2. Don't rely on the stop loss into the close. It's cancelled at 315. This is the one that catches people. 3. If you specifically want to trade at the closing price, place a limit order into the auction window. 4. Don't be surprised when the official close differs a little from the 330 last traded price you saw on the screen.